Welcome back to the 80 Money Show. Now, there are plethora of funds that are available in the market to invest your hard-earned money, but how do you assess which is the right fund for you? So what are the criteria that you should be looking at? And to help you navigate, it's time to get all your mutual fund related queries answered onto the show. And today, to answer the same, we have on board Hemant Rastogi, who is from Vice Invest. Thank you so much, Hemant, for joining us today on ET Now. We are a bit short on time, so just quickly start and get ahead with our portfolio related queries. And today we have our first caller on board. Rajesh Kannan is online. Hi, very good evening, Rajesh. Please go ahead and ask your question.
Hi, this is Rajesh Kannan. Actually, I was having moderate, very good investor. I was investing in mutual funds from the 2015 onwards.
Okay.
Okay, but I have a couple of funds, but I have more funds, but I want to reduce it. I want to first start from that 60,000 I can able to spend every month. Okay, I want to start from the scratch so that I can stop all the funds and I can start from that starter using which fund suggested. So I'm from the long I'm investing. I know that I'm very risk-taking appetite also.
Mm-hmm.
I need some fund suggestion for that investing amount of 60,000 per month.
Okay, so Rajesh, what you're saying is that all the mutual funds that you have, you want to exit that and start afresh with 60,000 investments.
60,000, yes.
Okay. Hemant, so that's the question. He's investing since 2015. He wants to exit from all the funds and he wants to start afresh with maybe 16,000 per month of investing. So what will be your advice?
Well, I can understand that. See what he's trying to say. Maybe he's got like 14, 15 funds. So maybe he thinks that's the case of over diversification and he wants to kind of, rebuild his portfolio. But my suggestion would be, it's good that he has clarity in terms of how much he wants to invest now, is that to have a relook at his portfolio. Maybe there are some good funds which he has been investing for the last couple of years, especially if his intent is to invest for long-term and invest in equity fund. So my recommendation will be that have a relook at your portfolio. And maybe you'll find that there are some good funds where you can continue rather than, kind of exiting from all the funds. But indeed, if he wants to kind of exit from all the funds, and since I'm assuming that he's investing for long term, so I would like him to kind of build a portfolio, a fund which have been doing consistently well and a well-diversified portfolio. So maybe look at one multi-cap fund like Nippon India multi-cap fund, look at one mid-cap fund, which is Kotak Emerging Fund, and maybe a couple of large and mid-cap fund, which would be ICICI large and mid-cap or HDFC large and mid-cap. So look at a combination of funds in a manner that in your portfolio, not only you have funds which have done consistently well, but also ensure that there is the right amount of exposure to three segments, and there should always be clearly the bias towards the large caps. So maybe look at these four funds to start with.
Share the advice because we understand you have a lot of funds in your portfolio. So why not be selective? It's not advisable to exit all of those funds, but in case you are looking out for, so that's the advice coming in where you can look out for 4 different funds. But if you still have doubts, so then you can actually reach us again to us telling the names of the fund, and we'll try to help you on that front as well. But let's move on to the next query that we have, Hemant. That's coming from Dave. That's an email query. He wants to, his question is, does it make sense to buy a mutual fund with lesser NAV compared to a fund with a higher NAV when they are in the same category? So what will be your advice on that?
Well, I think I would say this is a dilemma that many investors face, whether they should go in for a fund which has a lower NAV or a higher NAV. I think broadly, I would like to say, I think let's maybe understand by way of an example. Let's assume that there are 2 investors investing 1 lakh rupees each in 2 different funds. One fund has a NAV of 50, and other fund has a NAV of 10 rupees. So the 50 rupees investor will get around 2,000 units. The other one will get 10,000 units. Now, assuming that there is only one stock in the portfolio and that goes up by 5% or 10%, for example, the 50 will become 55, 10 will become 11. What we'll see, the value of the portfolio will exactly be the same, which means that if a fund with a lower NAV has to outperform the NAV with 50 rupees NAV, we'll have to do better in terms of portfolio. So what is important is not the NAV, not the number of units that you get allotted, but the quality of portfolio and the track record in terms of how the fund manager has handled the ups and downs. So always focus on level of diversification, focus on how consistent the fund has been vis-a-vis its peer group. So it does not really matter what the NAV is. It's a myth that a fund with a lower NAV can give better return than the fund which is maybe higher NAV. So I think which is a myth. Focus on the quality and focus on the level of diversification before you make a decision.
Okay, so the difference in NAV doesn't matter. That's the view coming in. But Hemant, we have third query coming in, and the last one that we can actually accommodate. That's from Kirith, and he's doing 3 SIPs of rupees 5,000 each in Motilal Small Cap Fund, PGIM Mid Cap Fund, and SBI Small Cap Fund. Two small caps and a 1 mid cap. He has a high risk appetite, and should he stick to these funds for a corpus of 1 crores in the next 15 years? So there is the target, 1 crores in 15 years, an investment of 15,000 per month. What will be your advice?
Well, let's begin with how much he needs to invest to achieve his target. The time horizon is 15 years, so he needs to, if I assume annualized return of 12%, he needs to invest 20,000 rupees. Currently, he's investing 15, so he needs to add 5,000. And as you rightly mentioned, Shristi, there are 2 small cap fund, 1 mid cap fund. Even though he's mentioned that he has a high risk appetite, let's not forget that equity by itself is an aggressive asset class. So already you're taking very high risk. So my recommendation would be that he should kind of stop SIP in one of the small cap fund and look at a large and mid cap fund, the fund which I just mentioned, ICICI Pru Large and Mid. And for the additional investment, if he wants to achieve his target, like I mentioned, he needs to invest 5,000 rupees. That should be in a pure large cap fund, which can be Nippon India large cap fund. So I think this will not only bring the right amount of balance in terms of exposure to different market segments, it will also help him in reducing the volatility and improving the return.
Okay, so maybe you can exit one of your small cap funds and look out the suggestions given by Hemant. But with this, we'll let you go on that. Hemant, thank you so much for joining us today on ET Now and helping our viewers with their mutual fund related queries.